Welcome to your Mortgage Insider Update. It is June 23rd, and it's a different week than we thought it would be. This last weekend, strikes on Iran's nuclear facilities by the United States brought a lot of angst coming into the day. So far, things have been calm. Oil prices being the number one future of potentially inflation risk. This coming off Federal Reserve meeting last week, they did nothing, which is exactly what we expected. Federal Reserve Chair Powell still waiting on the data with potential inflation from tariffs, potential inflation from oil. Holding steady is what the Fed's going to do for the time being. There is talk that by July, they or the other members of the committee, the Federal Open Market Committee, could be open to cuts as early as July. That only seeing two cuts by the end of the year, according to the Fed statement and their dot plot. So let's take a look at what the charts are doing as this week kicks off. So we are starting off on a positive interest rate reduction starting this week at 4.3% on the 10-year Treasury. Mortgage bonds, the mortgage-backed security prices are rising. That's positive in the green there. We're going to focus on the 10-year Treasury this morning. So the 10-year started off lower, quite a bit lower, hitting the 200-day average. The 200-day average over time has been starting to rise. The last number of months, 6 months or so, has for sure seen an overall trending higher in rates with the lowest that we saw in the last few months back in April. So we're not anywhere near the lows that we were back in April, end of April, before we started this higher trend. So with today starting off in a positive, the week could progress there could be a lot of news. So we'll hope for the best with interest rates as they start the week off coming down to lower levels than they had been since the beginning part of May. And a break below could be pretty significant, all the way down to 4.12 before the next level of resistance, which was last touched back on May 1st. It's going to take some hopefully positive news in the Middle East to bring us to that point. But so far the flight to quality, interest rates calming down, the projections for future inflation has not been so substantial as to scare things back to where we've been. We've actually been stuck in this level since the end of May. We've had some positive days where rates have come down, then only to go back up, down, up. This could be another one of those down and then up trends, but we will hope for the best. Make it a great week. Try not to watch too much news, and we'll come back with you next week with a new update and see where we lie as we approach the end of June and look for the June unemployment numbers to come out first week of July next week. Have a great one.